Hello traders, Gary Wagner here, 11:58 in Honolulu, 4:58 in New York on Tuesday, 25th of January 2022, and this is the daily report for gold and silver. Precious metals witness gains across the board, and U.S. equities continue to trade under pressure as market participants await the updated monetary policy from the Federal Reserve tomorrow. Gold traded to a high of $1,854.20 before backing off just a bit, and as of 12 noon in Honolulu is currently fixed at $1,848.10. That is a net gain of $6.40. Silver had modest gains of about 5.5 cents, with the most active March contract currently at $23.85. While platinum gained about 0.5% in trading, it continues to be palladium that is outperforming all four of the precious metals traded on the futures exchange, with palladium futures currently approaching $2,200 an ounce, currently up $49.50 today at $2,190.50. This obviously a response to increased tensions with Russia and Ukraine, and the fact that the vast majority of palladium is mined in Russia. This first chart, a daily gold chart, does contain two separate fib retracement data sets. The first one occurring from June to August of last year. The second one beginning at the end of November's FOMC meeting up till the 16th day of November. We have plotted current levels of support and resistance, and the one thing that we can see right off the bat is that today's high of 1,854 came in just above our first level of identified resistance and closed just below that. Where gold goes to will all be contingent as to what the Federal Reserve has to say tomorrow. In terms of our major resistance, I'm still looking at that as a band between the 78% retracement, 1867, and the top that occurred on November the 16th, when gold traded to a high of $1,880. In terms of where we are currently plotting support, the first level again is a band between $1,833 and $1,828. The 1828 is based on our long-term data set, the 61.8% retracement. Our shorter-term data set, the 38.2% retracement level, occurs at 1833. But I still believe our major support comes in starting at about 1800 and going up to about 1809. 1809, of course, is the 50-day moving average. We're looking at a Heightened chart, which gives us an idea of the strength of the trend. What we can see is we do have a consecutive series of green candles over the last couple of weeks, with the exception of one red candle that occurred on the 17th of January. However, we do have good body size, but we also have tails in many of these candles. It's certainly not as strong as the rally we saw at the conclusion of the November FOMC meeting. As you can see here, it contains very large body size and completely void of lower wicks. So what can we expect from tomorrow's Federal Reserve meeting in terms of the statement and the press conference by Chairman Powell? The market, for the most part, has factored in that the Federal Reserve will implement a series of rate hikes, 3 to 4 rate hikes of 0.25% each, that they will conclude their tapering process by the second week of March and implement their first interest rate hike in March. That being said, if the statement as well as the press conference, we could expect an almost neutral move in gold based upon what comes out of the Federal Reserve meeting. However, if they are much more hawkish than what has been perceived, we could see gold come down. And if they are more dovish than currently perceived, we could see gold move up. However, remember that the current geopolitical tension in Russia continues to mount, and therefore we could see a very positive or upside move in gold based on geopolitical concerns. Last chart is in 3-line break format, similar to the point and figure chart in Western technical analysis. It removes the element of time and focuses on price changes. And what we are seeing is that according to this chart, the expectations, as you can see here in blue, are still looking for higher pricing. But realize this is a technical charting system that does not take in any way the fundamentals at play. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.